a West Point commander and graduate from West Point with a systems engineering background. Didn't stop there, became an MBA uh, out of Texas Christian, and then continued in the education with a Master of Public Affairs and an Executive Masters of Public Leadership at the University of Texas at Austin. So lots of education and background, and moved into the commercial real estate world with Hillwood, and did some urban planning work there and got to understand the development and asset management side of the world, but had apparently an entrepreneurial bug and wanted to get out, and found fintech and prop tech as uh, an area that she wanted to really focus her career, and most recently with a partner formed Otso, which we found to be a great solution for clients that are wanting to both underwrite leases, manage tenant credit risk, and understand their investment in their portfolio in a way to mitigate that risk from both a tenant credit and I would call it a tenant credit enhancement perspective, and a management of the risk along the life cycle of the ownership, and in a way to be able to enhance value in that asset through the management of that credit. So really delighted to have Marissa join us today and to share what her product and services are and how you all can take advantage. We'll have Marissa give a quick presentation to introduce the different products and services of the platform, and how this solution can help you or your clients when managing your portfolio, or in the acquisition of property, and then open for questions. And I would think that along the way, if you have an urgent question you want to jump in, please do, and we'll do Marissa will do her best to address that. So Marissa, if you want to share your screen and take it from there.
Yeah, thanks so much, Jeff. Well, hello, everyone. It's great to meet you. It's great to see some of faces I've met before again. And as Jeff mentioned, I've been in the industry now over 10 years, started out in asset management, done my own investments. And I think just like any other entrepreneur, if you would have told me 10 years ago when I started my first technology business in this industry that I would be doing tenant risk mitigation, I would have probably just laughed, because that was certainly not where we started 10 years ago. But such is the story of, I guess, an entrepreneur's journey. And through the years, we've iterated to what the industry tells us they need. And this most recent iteration, we've been offering this solution for almost 3 years now. I'm working with some of the largest REITs in the country. But how does this in our solutions connect to you all as brokers? I hope that, really kind of two parts solution. I think that could be beneficial to either if you're on the investment side, the landlord side, or the tenant side. So hopefully I can offer some resources, whichever side of the aisle you sit between those three. And open to questions, and please stop me. This is informal. I have a presentation just to guide the conversation, and I have some demos, but please stop me at any moment to ask any questions or comment. So can you all see my screen yet or no?
It's coming up now. There you go.
Okay, so as Jeff mentioned, you're one of the leading fintech companies in the industry, really the first to bring any sort of fintech solution to the industry a few years ago. And when I say fintech, a lot of our platform has to do with evaluating tenant financials, and our main business is evaluating tenant credit financials. And so in that, we also touch into lease security from a standpoint of making some recommendations of lease security and offering some alternatives for lease security, which I'll get to in a sec. But first, we'll start with just kind of like the biggest problem we solve as a company, and it's the challenges of the traditional tenant due diligence process. And this is specifically as it comes to leases. when the LOI, is issued and there's some proposed terms, and it's time to, hey, let's look at your financials, whether you're a personal guarantor or a big corporate, maybe private tenant. The landlord's typically asking for that information. And what brought us to the table with big landlords like the Navins, the Shopcores, is the challenges that they experience with the higher volume, slow, fragmented, inconsistent decisioning because of lack of standardization. And really that comes from the lack of information and consistency of the type of information, whether it be a corporate company that has limited financials, but no public information. A lot of our customers say they're Googling, they're LinkedIn, or a personal guarantor who's giving you maybe 1 or 2 months of bank statements that doesn't really tell, the whole picture. The third kind of factor that we're brought in and the challenges that landlords are facing is the sensitivity around cybersecurity and hacking and security risks. So a lot of this information is still delivered via email. And so CTOs, CIOs of these big companies are worried, obviously, especially on the personal guarantor side, where they're emailing tax returns with social security numbers. There's a very, very large risk to that. And so the impacts that this all has on deals is, inefficiencies around leasing teams. On the tenant side, prospects getting frustrated because it slows the deals down. They submit and then they're getting asked for more information. Asset managers struggling to make decisions clearly with the information that they're presented with. And so we come in, and what we really do is to streamline that collection process. And another thing leasing hates to do is collect this information and go back and remind them to submit the information to them. And so speed of collection is what we take completely off the backs of our customers. It works by submitting an order on our platform. We automatically send an email with an application link. I'll show you that in a second. But our speed to collection, specific to the more retail customers who have personal guarantors, is around 7 days. Our office customers, industrial customers, who tend to not have us reach out directly to the tenant because they've already maybe collected financial statements themselves, that's pretty much same day turnaround for us. Reliability of information. We extract from Experian corporate credit information, Equifax on personal background, personal credit information. And most importantly, our biggest differentiator, especially this is specifically to the personal guarantor side, is we have a partnership with a company called Plaid. And this is where a lot of the fintech technology comes into play, in that we are able to offer a connection to Plaid, which Plaid is basically a billion-dollar company that's connected to every bank in the country. And so if you've used Venmo, if you've used Zelle or any of those types of, transactional, even Facebook Marketplace, chances are you've definitely connected to your bank account with Plaid. And so part of our application for personal guarantors is offering that as an option to the tenant. It's not mandatory, but in lieu of uploading statements, they connect to their accounts via Plaid. And then third, we are SOC 2 compliant, which is the highest cybersecurity certification that you could get in the industry. Obviously, we work with like REITs and some are public, so that's extremely important that we have that highest standard of compliance. Nothing is emailed to us. It's all securely uploaded or connected to via our platform. So I will skip here to some of the status quo and how our methodology compares to the status quo. And so for a lot of our customers, when we start working with them, they have financial statements. They may check personal credit. Some of them check personal background, not everybody. And they'll maybe collect like 1 to 3 months, or they'll maybe just collect P&Ls. And so what we do is we're able to offer entity credit, which most of them don't collect, but really going down to Plaid The plaid connection is the big deal on the personal guarantor side. And on the entity side, we're able to include credit and include trend comparisons. We're asking for a little bit more on the entity side. But with that, we're able to deliver deal-specific insights that show landlords where there's some vulnerabilities depending on the risk of the tenant, and making some recommendations around lease security. And again, these are recommendations. We never tell them, don't do this deal. We're just simply saying, hey, this is a higher risk applicant, then here's how maybe you could protect your deal costs investment. And the last thing that we have too is we do use automation, AI, some AI technology in our collecting and in some of our analysis. But at the end of the day, it's a person, and so every deal is quality assured by a person. If there's any engagement with a tenant directly, we have actual person, connecting with them, obviously CCing the leasing team, so they're always involved. So that's another differentiator, and why customers really like us, is that feels like there's this dedicated credit team to them. And so experiencing our platform in action. And so what happens is there's usually a request made by a leasing operations person, asset management, someone on that side. This is an example of personal guarantor, but we have multiple different types of orders, whether it be personal guarantor or entity only. And so they'd start a new report, simply go on our platform and request the order by submitting information about the applicant, their name, email. They let us know and verify if we have permission to directly reach out to the applicant. We know that's always sensitive to some firms. And then they enter the deal economics, so the proposed LOI terms, square footage, term, months, commission. And we collect this so that, again, we can deliver those deal-specific insights in our report and, understand the investment the landlord is putting in, and be able to, make some recommendations there. And so, there's a team kind of function where you could have others on your team get the report delivered. And then from there, it's basically uploading maybe the LOI. Some don't upload the LOI. And then when they hit submit, it sends the application to the tenant. Now, there are certain deals where there's sensitivity about that. And as I mentioned, the tenant doesn't always have to receive the application. If the leasing team collected the information on behalf of the tenant, and usually this is bigger private companies that want like an NDA, they will collect it and then submit to us directly within our platform. That's another type of order. The tenant, on the other hand, if we are to collect directly from them, they'll receive an email from us. They know like where it's coming from. So we work on behalf of Phillips Edison. Pico is one of our customers. We're asking them, here's what to have ready for the application. And then, they're entering some information. Again, this is personal guarantors, mostly our retail customers. If it's non-retail or no personal guarantors, it's a different application, but this is just giving you an idea of what the tenant would experience. So entering some, information about the entity, information about their personal expenses, verifying their identity. This is also used via Plaid, where they enter a phone number, birthday, they receive text. If they receive the text, they enter that here, and then they're going to get requested this QR code to take a picture of their driver's license. If they're not a citizen, they can upload their green card, their passport, all of that. And in the background, we're able to do a number of security checks on their identity. If they don't feel comfortable using a phone, which only 1% to 2% will opt to not feel comfortable doing it this way, there is a way to opt out of this method and just enter everything manually. I think I have something in the chat. Jeff, would you be able to take a look and see if there's a question there? In the meantime, I'll keep going. And then, so here's where we're asking for bank verification. Again, on the personal side, they're given the option to upload or connect to their bank. They could do one or the other or both. And so this is, how they would connect to their bank account via Plaid. If they did two-factor authentication, all of that would be just identical to their banking experience. They select the accounts they want to connect to, and then that's it. They can connect additional accounts with other financial institutions, or they can opt to just upload, statements from a retirement account and whatnot. And this is where they would upload their tax returns, if they have an existing entity, financial statements, and then any additional financial statements from maybe an IRA, if they want to submit that as well. And then this last is just giving us authorization to do a soft credit pull for them. Again, it's personal guarantors. There's no impact on their credit score. It's a soft pull, and then that's it. And then they receive an email. The requester receives an email letting them know they submitted. And then the report, once we're finished, looks like this on the personal side. I'll go here. So we look at 5 factors when we're looking at a personal guarantor. And again, we're really looking at if the business goes belly up, how strong is this person, to hold up the rent in a case that the business is bankrupt or unable to continue. And so we look at, we have a scoring system, we have colors, all of this, we have articles on how we, rate all of this. FICO score, we make the recommendation on rating very similar to how a lender would look at a credit rating on someone trying to purchase a house. What is their average balance to obligation? With Plaid, we're able to pull 2 years of banking activity, which gives you a really, strong data point of what their average balance is to their obligations, what their current balance is to the deal cost the landlord is investing in, how many months of rent do they have on hand currently, personally, and what is their ability to pay rent, meaning on average, after they pay their bills, how much do they have left to pay the landlord if they are to default. And so this next page is just showing our work, where here's a low risk rating, how all the points kind of add up to this overall rating. And then last is kind of a guide of, depending on the overall rating, is how we make our kind of lease security recommendations. So as you can imagine, if it's a low risk tenant, we're gonna recommend you maybe lock up 5% or less, lower amount. The higher that goes, obviously we're gonna have recommend that the landlord ask for more to protect their investment. This is just the deal economics, and then just a breakdown of how much is invested versus how much the landlord's going to put in their pocket for profit. When is the break even, depending on how much they collect for lease security. So this page is here's the minimum and the maximum of what we recommend you collect. Cash management, this breaks down all of the financial accounts they submitted to us. That includes ownership names, average balance, and their current months of rent on hand. So this is kind of their cash strength. And this is their credit strength. Whereas their credit score fall, this is the actual FICO score, for example, reasons for that, any delinquencies, collections, and then a breakdown of all their trade summary accounts to include, what is their credit utilization rate for their revolving credit? Do they have a mortgage, line of credit, installment? All of this. Background covers, basics, personal, criminal, any licenses, any foreclosures, any, we're able to verify properties that they list as assets. We're able to verify any other corporate and business affiliations, maybe other businesses that they own. We give you a summary here of anything that's present. We also include the actual report, which is typically 30 to 50 pages long, if you want to dig deeper into anything that you see here. Key data points, we're going through, their credit utilization. We're showing their monthly obligations. What is the verification of income over 2 years? We're able to show you anything on the entity. Even if it's new, we're actually able, usually there's a credit report that kind of shows you where they fall. If corporate linkage at the bottom here, is this the parent company? Is this not the parent company? Usually important to know who you're signing the lease with. And then the last page is usually just submitted docs. And then entity, if there's any high risk indicators, then, we'll usually add color, or we'll also add some summary on the, on any financial statements that they submit as well. I'm going to check the chat because I think I have
So,
questions.
Marissa, the question, the first prompt was just to prompt for questions. Then
Oh,
April asked about
okay.
the hard pull, if there is one, at some
That's a
point in
great
time
question.
in the process.
Yeah, April, the answer to that is no. It never turns into a hard pull. It's just a soft pull inquiry. So there's no impact on the credit score at all. Any other questions? And I'll go into the entity report.
Yeah.
Okay.
Well, we have a quick break. Why don't we open up, Keith, Max? Anything? Yeah. Nothing. Let's keep rolling.
Nothing yet. Okay, let's keep rolling. And so in a case that there's no personal guarantors, which is mostly our office partners, you'll see there's still kind of the same standardization and design to the report, except obviously we're looking at an entity and not a personal guarantor. So we're going to show you financial statement analysis and then their trends in profit, assets, equity, so how they're trending across the board, their credit risk. And so credit risk, a lot of people actually, we find, like, take it for granted from us. And I myself didn't really understand what goes into an entity credit score. And it's really, do they have any derogatory? How are they paying their bills? Are they 3 days behind? Are they 5 days behind? Do they have any liens, judgments against them? All of that goes into the credit score. Financial stability is really powerful too, because financial stability comes from the credit, but what this does is it compares this business to others in its industry. So for example, if an entity is maybe paying 15 days behind, right? But the standard in that industry, or the average in that industry, is 30 days behind, they most likely will have a stronger financial stability score because they're performing better than others in its industry. And so this is more of an industry comparison. And then cash to rent is really taking an average on their balance sheet of their cash and receivables that they're reporting and seeing, how much cash do they typically carry and how does that relate to the rent you're asking them? And is their cash trend increasing or decreasing over the period of time, the last few years that they submitted to you? Again, this is just showing our work, going back to the overall rating, the point structure, how do we get to this overall rating, and its relation to the lease security recommendation, which is here on the next page. Again, same thing, deal economics, how much profit you're making, when is the break even, what we recommend you ask a min and max. Key data points is obviously different. We're looking more at cash, profit margin, liquidity levels of this business, current asset ratios, quick asset ratios. And then the credit information, again, corporate linkage, all of that was on the personal guarantor report as well. And then we kind of end here with any of the documents submitted are, secure URLs. And then usually there's a summary of the financial statements that they submitted, any comments around any high risk ratings that we see. So these are the two reports that we offer. And usually our typical customers are using us on a credit basis. We're really the first in the industry. I guess when people think about bringing in a third party to evaluate tenant financials, they think of like those really expensive consultants that charge a lot of money. And what we do is, we wanted to make it more affordable. So we're significantly less than those consultants to be able to help either larger landlords be more efficient with their volume and their lease velocity, or we do have some smaller ownership groups that just want more information in deals that they're looking at. So we do work with both small and large landlord groups. Any questions before I move on to our another kind of solution that we have that I wanted to share with you?
Just from a use case standpoint, Marissa, what are you finding that the application of this for new leases as they come in, or in a portfolio review on an investment acquisition as part of the due diligence?
Yeah, that's a great question, Jeff. The majority of our business or the reports that are requested are around either assignments, new leases, or renewals, or in some very few cases, expansions. So not necessarily more of like a review of their portfolio. We do have some data that we're working on with a current customer that we might be able to do that down the road. There's a roadmap to get there because all of this data is actually pretty valuable. So to kind of look at your portfolio at scale with looking at the risk that we're determining on each tenant is pretty useful, and our customers are showing interest in that. But yeah, it's mostly new leases and assignments.
And as
Max,
far as
you have
when
your
the
hand up?
report is,
Oh,
I'm sorry, April just
Yes.
had one in a second. Sorry, just to finish
Oh.
this. Does the applicant get a copy? Or just the
no,
client get a
no,
copy?
they don't. They never. No, just the leasing
Just the client.
side. Yeah.
Yeah.
I mean, they will. They have shown. I know, like a few of our customers have said, like, hey, you know, we have shared it with the applicant to kind of show them to justify, you know, why we're asking.
But that's up to them.
That's
in the negotiation.
up to them. Yeah, exactly.
Yeah, Marissa, Max here.
Yeah.
How do you calculate your fees for this service? Based on the dollar amount of the lease, or, you know, you have a figure for particular clientele, or how do you do that? And one more question is, let's say somebody have a $240,000 first term lease and they paid $40,000, and then on the balance they decide to skip and leave. How do you go about collecting that, or rather, how do the landlord go about collecting that $200,000 that these people skipped on?
So are you asking, like, in a case that the tenant defaults, Max?
Yes.
Is there any, you know, way we're mainly involved in that negotiation LOI phase, Max. So it's really just giving the landlord the kind of like that snapshot. We don't have any role in helping collect. You know, if in the case of a default, you know, we don't have any role in like collecting, or in some cases we have reassessed some tenants that have had some legal issues with landlords. But
Marissa,
no,
are
we're
there
not
two
in the
parts to
business.
it? One is the evaluation, which you just went through, which is a credit risk analysis. But then I think Max is asking about the actual letter of credit and the security of the lease. That's what
Okay.
I think that's the next part of what you're going to get to, right? Is how you're actually securing this based on this information.
Yes.
Okay, is that what? Okay, I thought you were asking in relation to a default, Max. But yeah, I can. I think your first question though was how much does this cost?
Yeah.
Yeah, so it's anywhere. It's a credit system, so it's anywhere between $299 to $499 per report, depending on the package, right? And so we have like high volume users. Usually our REITs will commit to maybe 15 credits a month. They roll over an annual term. And so, you know, they're paying us like monthly, you know, at the $299 rate. We have some of the smaller customers that maybe we'll just do 12 a year. We'll give them a package of maybe a little bit of discount if they want to buy all 12. But we do have one customer that would rather just use us on their assignments and not commit to any credits because of the, I guess, structure of all of their entities and their properties. And so they do pay the $499. A lot of them end up passing it down to the tenant as kind of like an application fee, or in the cases of the REITs, you know, they kind of like eat that cost as an operational cost. Any questions? Okay, so I'll move on to kind of the second part, and hopefully this will address your question, Max. And so in addition to doing evaluation of tenant financial credit and creating, you know, that more efficient experience for all parties, really, we also offer, specific to our office tenant reps, is a letter of credit alternative. And so what we've done is, I mean, again, we're entrepreneurs, and as we've kind of like talked to our customers in the industry, a lot of them, you know, landlords love letters of credit, and it's, I think, regionally based, and it's also, I think, property based. So mostly we're seeing these on the office side. Not a lot of our retail customers, you know, use these for security. It's mostly cash. But obviously in these bigger deals, landlords like these letters of credit. And so what we were hearing was, especially in this current environment, tenants are putting a lot of resistance to these letters of credit. And why? Because when you lock up money, and no one likes to lock up money, period, but to lock up money in a letter of credit with your bank, you typically have an origination fee and you have an annual fee, and then you have annual renewals. And for a tenant, those are all just, that cost adds up over time to just lock up money. And so we've partnered with a bank. We actually partnered with Naveen to create kind of this new solution. And it's called, the bank is called Veritex Bank. It's an institutionally approved, institutionally landlord approved bank that meet all, the requirements for institutional landlords. And so it's just simply put, it's a letter of credit with no annual fees. So the tenant still has to lock up the capital, right? But there's no annual fees. There's only an origination fee, and then there's no renewal requirement. So it's essentially a letter of credit that was designed specifically for commercial real estate leases. And on the landlord side, they don't have that kind of administrative burden of ensuring there is a renewal, because they do have to do that every year. And so Veritex now offers this letter of credit with no annual fees. So in any deals that y'all are doing where you're seeing letters of credit, whether, especially if you're representing the tenant, this could be an option for them. And, going into this knowing this is approved by institutional landlords, the bank is, and the actual, document itself was approved and created by a commercial real estate attorney. And so to give you an example of, like comparing, if you have a $225,000 requirement of letter of credit for a bank. So traditionally, the fee will be about $45,000, and that's over like the term of the lease. And sometimes it takes 1 to 3 weeks on average also to get these approved. So that can kind of slow things down. With using LCX instead of a traditional letter of credit, the product fee would be, the origination fee would be $6,700, but then there's no annual renewals and no annual fees. So they're saving about $38,000. We're doing a deal right now with a tenant that's having a lockup about $1.5 million. And I think we added up the savings was a couple $100,000 over the 10 years. And so that's extremely obviously material and significant, especially for those of you that have, are more tenant reps and want to figure out a way to benefit your client and save them money. Or on the landlord side, I mean, we've heard, we have some customers in South Florida that are hearing some resistance when they offer letters of credit. So they're now offering this as an alternative, obviously to save the fees and get the security that they want. And so the bank itself got a 5-star Bauer rating. It's FDI insured, over $11 billion in assets. And how it works is just simply that it's facilitated by us at Otso. So where we come in, we're not the ones holding the money or anything. The bank is, obviously. But where we as Otso have come in is facilitating the application. And so essentially the tenant is opening an account with Veritex Bank, and we're just facilitating that process. And so we have an application, they go on, it takes minutes. We're really just verifying their entity and their identity, personal identity. And then from there, that's it. And then we're able to issue it out and, go from there. Again, we can offer burn downs in case there are burn downs. Again, this is anything that the lease dictates, we're able to be flexible with. So I am happy to share all this information with you, through Jeff and Alejandra, so you have all of this. But any questions?
But to Max's point, if it's take your case 240, whatever, 225,000. If they default, the letter of credit's paying them the balance. I guess that's the collection process. You're not doing the collection, but the letter of credit is enforced, and just whatever is covered in the letter of credit is released at that point to to mitigate the
It's
the damage.
identical to, it's identical to a letter of credit. As far as what happens at default is, the landlord gets those funds. And so we made sure all of that is identical. So there is no, confusion or worry as far as how it's, in the need that it has to be executed.
Marissa,
Great question.
there are quite a few new agents on the call with us. If you can explain to them what a letter of credit is and how they might bring it up when working with their tenants as an added, working with their clients as an added value.
Yeah, sure. So for those of you that are representing a tenant, this usually would come up around, obviously, the securitization negotiation phase. And depending, again, like I mentioned, these aren't proposed in every deal. It's typically larger deals, mostly on the office or industrial side, where, the landlord will require a lockup. And this is done through a financial institution, typically the bank of the tenant, which the landlord has to approve. And so traditionally, they would request this letter of credit, and the tenant obviously doesn't want to do it. But in the cases, they can't get past that, the letter of credit would have to be instated. So the tenant would go to their bank and let the bank know, hey, I'm doing this commercial real estate lease, and the landlord's requiring a letter of credit. It's $100,000. So the bank would say, okay, great. They would issue them a letter of credit. And so there, though, again, they would be charged an origination fee. And then there's an annual renewal requirement for the tenant to show the landlord that it's still active. And the annual requirement also includes a fee requirement that the tenant has to pay the bank in order to keep it active. On the landlord side, like I mentioned, if you're representing landlords that could be running into issues that are offering letters of credit in their deals and are getting some pushback, especially in the current environment with tenants not wanting to do a letter of credit or pushing back because of the letter of credit fees, they're offering us as an alternative, and it's helping, get deals done in that way. Thanks, April.
And just a little bit further, for those that aren't aware, the letter of credit typically has a compensating balance, so that that tenant would have to, if it's $150,000 letter of credit, they're putting $150,000 in an account that has to stay there. And that was what Marissa was mentioning, that they don't want to lock up that money, but that part doesn't change. It's just that additional cost to the process changes, but it does do what Max is talking about, is that's there in case of a default, and that money is then released to the landlord per the terms of the lease if there's that much due under the loss to the landlord.
Yeah. Great questions. Anything else?
You had
That-
at one
that
time,
concludes-
Marissa, a tenant monitoring capability. I don't know if you still do that or not, but that might be something that, if it is something you still do, could be interesting. I'm not sure, again, if you don't do it.
We don't have we have kind of like a new angle on that with our existing customers, and it's kind of like the ongoing, after the tenant applies with us the first time, we're able to do some ongoing monitoring with them. But that's still kind of like on the roadmap.
Gotcha.
So it's nothing we're offering right now, publicly anyway. So if y'all have any questions, if y'all run into a deal that requires a letter of credit, or have any clients on the landlord side that are looking for more information or efficiencies in the tenant credit review process, please let me know. I'm happy to help. My information is right here, phone number and email. It was great to meet all of you. Jeff, thanks again for the opportunity. Alejandra, for having me today.
Appreciate everyone joining us, and thank you, Marissa, for taking the time to share. It's a great product, great solution, and I'm sure it can benefit participants on the call and others that watch this in a replay mode. So reach out and take advantage.
Thank you so much.
All right,
Thanks,
thanks,
everybody. Bye-bye.
Thank you.
Thanks again, Jeff.
Thank you.
Max, great to see you.
Same here, dear.